we're seeing very, very steady growth in physical demand from emerging markets. What has changed over the last 12 months is actually the fact that now, very late, but finally, Western financial investors are starting to realize, well, actually, perhaps we should have some gold in our portfolio. Only starting in the second half of 2024, we've seen some modest inflows into the gold ETFs. We continue to see inflows into the ETFs in the Western world. Something big is coming, and he wants to be a part of
Yep.
that administration for
Yep.
some sort of a new Bretton Woods agreement. And he also says that gold is by far his largest private position and that he's pretty bullish on that.
Gold prices fell on Tuesday as investors fled from safe haven assets and continued to monitor remarks from Jerome Powell, chair of the Federal Reserve. From a monetary perspective, gold is still significantly undervalued. Gold dropped more than 1% to reach a two-week low on Tuesday following President Donald Trump's announcement of a ceasefire between Israel and Iran, which diminished Bullion's safe haven appeal. Spot gold was down 1.2% to $3,326.87 an ounce after hitting its lowest level since June 11th earlier in the session. U.S. gold futures slipped 1.6% to $3,339.40. Ronald-Peter Stoferle, a renowned Austrian fund manager, author, and gold market analyst best known for co-authoring the annual In Gold We Trust report, exposes that gold fell as safe haven demand waned after U.S. President Donald Trump announced that Israel and Iran had agreed to a ceasefire that would begin around midnight Monday in Washington. Bullion fell as much as 0.6% to below $3,350 an ounce in early Asian trade. Trump, who made the surprise announcement on his Truth Social platform days after ordering airstrikes on Iran's nuclear facilities, said the deal was aimed at ending the fighting permanently. There was no immediate comment from Iran or Israel. Rising safe haven demand as geopolitical tensions escalate has been one of the main catalysts for gold's 28% rally this year, along with concerns about the economic impact of Trump's tariffs and increased buying by central banks. Investors will be watching testimony from Federal Reserve Chairman Jerome Powell in the coming days for clues on monetary easing, with lower interest rates typically supportive of non-interest-bearing bullion. FOMO, inflation fears, and increased interest in performance gold, such as silver and mining equities, are all driving gold's bull market. The Basel III adjustments are viewed as minimal, with most bankers still ignoring gold. More significantly, nearly 2,000 tons of gold have been surreptitiously imported into the United States, potentially by institutions or the government. With talk of a Fort Knox audit and a fresh Bretton Woods-style reset, large investors such as Scott Bessent are taking big gold bets. Watch the video for more details, and don't forget to like and subscribe for updates.
Well, I would say, Daniela, I think this bull market is basically it's based on a couple of different pillars. First of all, we're seeing very robust central bank demand. We had like 3 years, and we in football or in soccer language we talk about hat tricks. So we had a hat trick 3 years in a row, more than 1,000 tons of gold being purchased by central banks. And it's not only this what I would say kind of behind the curtains remonetization of gold. It's also the fact that the repatriation of gold is picking up momentum again. So this is a sign for the loss of trust that we're seeing in the international system. And obviously Donald Trump was to large degrees responsible for this, this loss of trust in international let's say institutions and established things that we all got used to over the last decade. So there's kind of a bear market in trust, let's put it that way, on the international basis. But then what's really excites me, Daniela, is the fact that things like a revaluation of gold, for example, or auditing Fort Knox, this was something
Yeah.
that we talked about, in our gold bug world. But now this is really becoming mainstream.
Yes.
Yeah, I think, gold is
true.
really becoming center stage now. However, if I talk to institutional clients, most of them say, well, we couldn't care less about it. It's already too expensive. We didn't participate in that bull market. It's too late. So that gives me a tremendous amount of confidence that, we will be climbing this wall of worry, that every major dip is being bought. And that's what we're seeing, actually. We're seeing very, very shallow corrections. And that's that tells me that there's so much capital waiting on the sidelines, waiting to
Right.
enter this trade, that we're still, as I've said, far away from the top. Well, to some degree, it's FOMO, fear of missing out. Then I would say it's also the fact that inflation could stage a comeback. I don't think that inflation is dead. I actually think that we will continue to see high inflation volatility, and therefore another wave of inflation could become a trigger for gold going forward. It's pretty clear that what we call performance gold, and that was really the core topic of this year's In Gold We Trust report. It was called the Big Long. And that actually means that now it's time for performance gold, being silver, mining stocks, and also commodities. Because in this part of the cycle, that's really when those kind of levered assets on gold or levered plays on gold really pick up momentum and finally start outperforming gold. And as we've seen with silver recently, it can get pretty interesting very, very quickly. So, Daniela, we put out an article on LinkedIn where we basically summarize the findings from, all those topics: tier one capital, HQLA, tier one asset. And I think there's quite a lot of misunderstanding, and it's also, to some degree, it's very technical. From my point of view, and talking to lots of people in the financial service industry, talking to central bankers, talking to organizations, talking to big bullion dealers, actually, I wouldn't expect too much. I think it's going to be kind of a no event, because if you talk to bankers, I'm sorry, they couldn't care less about gold. For them, it's just a useless shiny metal that's just sitting around. For a bank balance sheet, it's nothing that really makes the guys at the trading desks, at the asset liability management, that really attracts them. So from my point of view, again, I think it's going to be a no event. But what's much more interesting, Daniela, is the fact that
Yep.
there's the CEO of StoneX said that there were more than 2,000 tons of gold, physical gold, being imported into the United States over the last couple of months. Now, who's actually buying that? Is it institutional players? Is it high net worth individuals? Or perhaps it's even the US government? Actually, there were some very, very interesting pieces by Michael McNair saying, well, there's no reason to be, or there's, from a legal point of view, the US could actually buy and sell gold anytime. So perhaps, what's going on behind the curtains with this Mar-a-Lago Accord. I think that I'm not sure if gold will play the, how do you say, the leading role, but I think it will play a role in that movie. And if we connect the dots, it's not only this pretty large amounts of imports into the United States. We're talking about a revaluation of US gold from $42 to current prices or even higher. We're talking about auditing Fort Knox, and Scott Bessent. He was trading alongside Stanley Druckenmiller, and he worked for George Soros. He said, well, actually, something big is coming, and he wants to be a part of
Yep.
that administration for
Yep.
some sort of a new Bretton Woods agreement. And he also says that gold is by far his largest private position, and that he's pretty bullish on that. So I think that makes me much more confident compared to those, let's say, very technical things around Basel, where, from my understanding, it's not going to really have a major impact on
Yep.
gold demand.
Investors should view gold as a diversification tool rather than a hedge against geopolitical risk events. Some analysts note that safe haven demand for gold has been limited because the conflict has remained contained within the region. Alongside gold, oil prices are also struggling to sustain gains driven by the ongoing turmoil. Citing data from the World Gold Council's annual Central Bank Gold Survey, we highlighted that portfolio managers view gold as a multifaceted asset. According to the survey, the top 3 reasons for holding gold are its performance during periods of uncertainty, its utility as a diversification tool, and its function as a store of value. The U.S. federal debt situation continues to deteriorate despite political promises of fiscal responsibility. The national debt has surpassed $34 trillion, with few meaningful initiatives successfully addressing the underlying structural issues. This budgetary reality has created persistent upward pressure on gold prices. Ronald Stoferle mentions that the U.S. dollar's weakening trajectory against major currencies has provided further support for the analysis of all-time highs for gold, as the two typically move in opposite directions. Fed Governor Christopher Waller's view is that the U.S. central bank should consider cutting interest rates at its next policy meeting on July 29th and 30th, which would keep the USD depressed and further support the non-yielding yellow metal. Traders now look to the U.S. economic docket, featuring the release of the Conference Board's Consumer Confidence Index and the Richmond Manufacturing Index. This, along with speeches by influential FOMC members, will drive the USD. The focus, however, will remain fixed on Fed Chair Jerome Powell's testimony before the House Financial Services Committee, which could provide clues about the future rate cut path and influence the near-term trajectory of the XAU-USD pair. Now let's get back to the interview.
I would say that the new gold playbook is still, it's still valid, and it's a point that um, I'm really emphasizing because I'm traveling quite a lot, not only business wise but also privately, and wherever I go to, especially in emerging markets. I've been to the FMF conference in January in Saudi Arabia, and you can really tell that gold for people in emerging markets in the Arabic world, in China and in India, has a clearly different appeal compared to the Western world. And if we have a look at the numbers, obviously it's not only central banks from emerging markets, but also private individuals being responsible for the majority of the gold demand. Let's say roughly 2/3 of the gold demand is nowadays coming from emerging markets. So I think that's basically this kind of love trade that I think Frank Holmes he coined this term. And I think it's important in our world to make a positive case for gold and not only this gloom and doom, everything will go to hell
Right.
case. So we're seeing very, very steady growth in physical demand from emerging markets. Now, what has changed over the last 12 months is actually the fact that now, very late, but finally, Western financial investors are starting to realize, well, actually, perhaps we should have some gold in our portfolio. So only starting in the second half of 2024, we've seen some modest inflows into the gold ETFs. And we continue to see inflows into the ETFs in the Western world, but it's still, I would say, fairly muted. There was a survey from UBS where they said the average family office, so those ultra high net worth individuals, they have currently allocated 2% in precious metals. So from my point of view, there will be, or there is, a bull market in sound money assets. And let's face it, it's not only gold that is trading very close to all-time highs, but also Bitcoin. So I would say that gold is some sort of a mirror of our monetary world. It's a mirror of our society. And what this mirror is telling us is actually we're seeing a very broad devaluation of fiat money versus hard assets. Every central banker kind of keeps telling us that inflation, nobody is really expecting another wave of inflation at the moment. Then on the other hand, I would say that, my friend Larry Lepard, he wrote a great book called The Big Print. We shouldn't
Yes.
underestimate the fact that monetary growth was actually um, quite low over the last couple of years. So we might see a monetary growth picking up momentum again. And then obviously, inflation also to some degree has let's say, a psychological factor. And I think that we all got really used to the fact that inflation is pretty stubborn, that it's sticky. Um, and I think that, talking to business owners, talking to investors, talking to, normal people buying stuff, we all got so used to inflation. Therefore, that this inflationary chapter that we started basically in 2021, I think it's not over yet. And obviously, especially the ECB already lowered very, very aggressively. So from my point of view, that they painted themselves into a corner if inflation should stage a comeback. Well, there's 450 pages of research. Um, so there's like lots of numbers, and just crunching the numbers for mining companies, becoming like free cash flow monsters, and still nobody cares about them. Large producers having like margins of more than $2,000 per produced ounce, and having paid down their debt over the last couple of years. But then also, this fundamental setup that we're seeing in the silver space, and as we touched before, I think that silver is now really, we've been talking about silver for ages, and it's a little bit similar. We're running one uranium fund, and my partner Christian, he always said, the fundamental, the supply demand case is so obvious, but the uranium price just really didn't move. And then at some point, we hit the trigger, and momentum kicked in, and it became a topic. And now I think we're seeing something similar with
Interesting.
with in the silver space. But Daniela,
Well,
I think one thing that is really important is, I think that Donald Trump, he's addressing very important things, especially, the Triffin dilemma that we've been very vocal about. He wants to protect this exorbitant privilege that the United States has, and at the same time, he wants to establish some sort of a reindustrialization of the United States manufacturing base. I think, what is most obvious to me over the next couple of months and quarters, and that's the most obvious trade. And you can have like various degrees of risk and kind of derivatives on that trade. But my biggest conviction is actually that we're going to see a huge bear market in the US dollar. I think Donald Trump is very vocal about that. He wants and he needs significantly weaker United US dollar. I'm not sure if that's really gonna solve the issues. If you have a look, if a weak currency would be the perfect recipe to prop up the economy, then Zimbabwe would probably be one of the most successful countries, and not Switzerland with a traditionally very, very strong currency. But I think that Trump wants and needs a very weak US dollar. Now, coming back to our initial topic, comparing the current gold price to secular all-time highs, what really stood out for me was the fact that actually, we've seen those tops in 1980 and in 2011, the US dollar index was trading at significantly lower levels. So in 1980, it was trading at 86. And in 2011, the dollar index was trading at 75. Now we're trading at roughly 99. So I think that in this next leg of the next leg of the bull market for gold, and also, probably mining stocks and especially silver, will be driven by a secular bear market in the US dollar.
The current drop in gold prices indicates a temporary shift in the safe haven mentality following the surprise announcement of a truce between Israel and Iran. However, the overall macroeconomic and monetary climate continues to support the long-term bullish argument for gold. Central bank accumulation, inflation fears, falling dollar trends, and mounting budgetary constraints all contribute to gold's status as a store of value and portfolio diversifier. While short-term volatility persists, seasoned analysts such as Ronald Stoferle believe gold's structural fundamentals remain intact and strengthening. Will Jerome Powell's testimony corroborate an anticipated Fed rate cut, reviving gold's momentum? Share your thoughts in the comments below. We'd love to hear from you. If you found this helpful video, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.